Your business may have a business credit score. Do you know what it is? If not, I'm going to show you how to check it and how to improve it. Where do you check your business credit score? Hint, it's not where you check your personal credit scores. I'm going to tell you the best way to check your business credit scores in one place without wasting time or money. I'm Gerri Detweiler, education consultant for NAV. NAV believes every small business owner deserves the chance to succeed. Let's start with why business credit scores matter. If you have not heard of these, if you've been running your business for a few years, you may wonder, why do I even care about business credit? There's a few very important reasons why business credit reports and credit scores matter. First of all, certain types of financing will check a business credit score. And so it may help you get a business loan. It may help you get a more favorable business loan. It may even help you keep your business loan. I was in a workshop where a commercial banker told me, we didn't check business credit when we made the business loan at our bank, but every year we would review the business credit of all our business credit customers. And if we saw issues, we would call the loan. So even if there's not a business credit check up front, there may be one later on. Also, insurance companies can check business credit and other businesses can check business credit. So your competitors or the companies that you want to work with may be checking business credit. I also did a workshop with a group of accountants, and one of the accountants reached out to me afterwards. She had worked in the supplier department of one of the top retailers in the country, and she said, we always pulled a business credit report on every company that wanted to be a supplier. She said most of the businesses we dealt with had no idea what we were talking about. I don't want you to miss out on opportunities because you don't know what's in your business credit and what it says about your business. So where do you check your business credit? Well, first of all, there are three major business credit bureaus that are the most commonly used in the U.S. Dun & Bradstreet, Equifax, and Experian. There are others like CreditSafe, Ansonia, LexisNexis Risk Solutions, but really if you focus on the big three, that's probably where the majority of credit checks that impact your business will take place. Understand that unlike personal credit, there is no requirement that a business credit reporting agency show you your business credit for free. That law that requires that free disclosure only applies to consumer credit reports, not business credit reports. If you check your business credit directly with those bureaus, in most cases you will be paying for that report. There's also another agency called the Small Business Financial Exchange, and this is a data warehouse. It collects payment information mostly from large banks and financing companies, and then it makes that available through the credit bureaus for certain credit reporting purposes. You don't go directly to the SBFE, but that information can make its way onto your business credit report through this relationship. If you want to learn more about the SBFE, we have a video for that. Business credit reports provide the data that's used to calculate business credit scores. So on the consumer side, you've probably heard of FICO. They're the main company that creates the formulas that calculate our personal credit scores. On the business side, there is a FICO score for small business called the FICO SBSS, but it's not nearly as widely used in business as it is on the consumer side. It's primarily used by banks and traditional lenders and for certain SBA loans. What's interesting about FICO SBSS is that it can combine personal and business credit data and use both to calculate a credit score. In business credit, the bureaus themselves create most of the credit scores. So each of the bureaus has a variety of credit scores that they sell. Experian has a credit score called IntelliScore, and that score comes in several different versions with different score ranges. Equifax has a menu of different credit scores with different score ranges. We'll share a link to a list of the major business credit scores and their score ranges in the description. So what goes into a business credit score? It's quite similar to personal credit with a few nuances. So payment history is the number one factor that makes up any credit scoring model that I've ever seen, and certainly true of business credit scores where payment history is really important. Here you need to have accounts that are reporting on your business credit reports. You need to pay them on time over time. You need to build up this payment history that over time helps create a strong business credit score. This is the foundation of all business credit scores. Another factor that can affect your business credit score is your age of your business. How long have you been in business? Most lenders prefer to lend to businesses with at least 2 to 5 years of history in business. There are loans for startups, but they're harder to get and fewer and far between. So one benefit of getting your business started is you start that clock ticking. I was at an event where I spoke to a business owner who started his consulting business on the side while he was still working his full-time job. And because he formed a business entity and set it up properly, by the time he went out on his own full-time, he was actually laid off from his job, but he was ready. He had 2 years in business. So he had already established that 2-year time frame that made it a lot easier for him to get financing. So don't put off that step of getting started. When it comes to the business credit score, it may also look at age of credit history. So when was your first account opened? And what is the average age of your accounts? That's why it's a good idea to start establishing business credit as soon as you start your business rather than waiting until you need financing. You can build that credit history that could be helpful for that financing when the time comes. Third factor is debt. So some lenders will simply look at the amount of debt that your business shows, whether it's through your financials or in your business credit history. Some business credit scoring formulas also take into account something called credit utilization. And it sounds complicated, but it's not that difficult. Basically, they take a look at your balance that shows up on your credit report, and they compare it to either your credit limit or the highest amount your business has borrowed. So let's say you have a credit limit of $1,000. Your balance on your credit report says $250. You're using about 25% of your available credit. And the higher that ratio gets, the more it can negatively impact your credit scores. Now, you can use debt. There's nothing wrong with using debt the right way to grow your business, but do pay attention to those ratios. And if your debt starts creeping up there and your credit score is going down, that's something you may want to take a look at and see whether it makes sense to pay down some balances. Company info can also affect your business credit. So a lot of times, business credit scores will take a look at the industry your business is, and they may compare your business to other businesses in your similar industry. So for example, let's say you have a floral shop and you're in the California Bay Area. They might compare your business performance or your business credit to other flower shops in the same geographical area. Certain types of businesses carry certain types of risks, and lenders know that. The credit scoring models can pick up on that. So knowing what industry is represented on your credit report is important. You want it to be accurate. Sometimes people will try to game the system here by putting down an industry that they think is low risk, but really isn't their industry. But that's not a good idea because it can come back to bite you, and sometimes you need that information for qualification purposes. If a bank sees that your money is not coming from the type of activities that your industry normally engages in, it won't make sense. Your loan could be turned down. Your industry is typically identified with something called a NAICS, N-A-I-C-S, or SIC code. And these are government codes that were created for tracking purposes, but they also now spill over into financing and other business activities. If you want to find out if your industry code is correct and what you can do about it, just check the resource in the description. Public records can also impact your credit. Now, this is information that's filed with a courthouse. On the consumer side, public information includes bankruptcy and used to also include tax liens and judgments, but those are no longer reported on consumer reports. But on the business side, any information about your business that's filed with a courthouse can appear in this section of your credit report. So that could be a court judgment against your business, a lawsuit, a tax lien, and it also can include UCC filings. UCC filings are filings under the Uniform Commercial Code, and they're used by lenders to let the world know that they have security interest in property of your business. So for example, you get a equipment loan, the equipment is pledged as collateral, then that collateral is the security, and they'll file a UCC filing to let everyone know, hey, If this business doesn't pay back its debts, we have first dibs on that collateral. Now, UCC filings aren't necessarily bad, but excessive UCC filings, especially ones that are showing that they haven't been paid off, can be a problem. And sometimes creditors will file a UCC filing, but they don't release it. So you need to check this part of your credit report very carefully. Another factor in many credit scoring models is the type of credit and the credit mix. So, for example, if you just have supplier accounts where you pay your vendors or suppliers on net 30 terms, that may not be as valuable as having a mix of different credit references, like, let's say, a business credit card or a business line of credit. This isn't true of all credit scoring models, because some will focus just, say, for example, on trade credit, and they won't have information about a business line of credit or a business credit card. But if you can round out that credit history, it's often helpful in the long run, especially as you go for bigger types of financing like bank loans or SBA guaranteed loans. And then finally, recent credit inquiries. So with your consumer credit, you've probably heard the advice, don't apply for too many credit cards or loans at one time because it can affect your credit, and that's true. Business credit is a little different in that inquiries don't tend to carry as much weight in all the credit scoring models. But still, they can be a factor, and you, as the business owner, you never know which credit score the lender is going to check. So best to be safe. It's okay to get credit, just shop carefully and look at the financing that's a best fit for your business and the financing that you're most likely to qualify for. NAV can help you find business financing. Just check the link in the description. How long does this process take? First of all, when you first get accounts, it may take 1 billing cycle, 2 billing cycles, even 3 billing cycles. So we're talking roughly 3 months for some of those accounts to show up on your credit report. So by all means, monitor your business credit. Monitor it with all 3 of the major agencies, because you don't know for sure which lenders are going to report to which bureau, and you want to see how you're doing on each one. If you have no business credit score, you'll probably start to see some movement at about the 6-month mark if you're proactive about getting a few trade lines that report. There's no guarantee. Everyone's credit history is different. Your industry is different. A lot of factors go into these credit scores. Stick with it, though, and by the end of the year, you should be making progress in a positive direction. And if you're not, then you look at the business credit report, look at what's reporting, and see what you need to do to fill in those gaps. This is a process, and it's a process that takes a little bit of work. But it's like anything you do in business. You're setting that foundation so that as your business grows, you have what you need to go to the next step. It doesn't have to take a lot of time. It doesn't even have to take a lot of money, but it is something you want to do proactively so that you're set up for the best possible chances to get what you need in your business. So I promised you earlier I'd tell you the best way to check your business credit in one place. And I know this is going to sound a little bit self-serving, but it's because it is the best solution for you, in my opinion. And that's NAV, because NAV is the only place for you to check, manage, and monitor your business and personal credit in one place. There's a free account that will give you summary reports. So if you just want to get started, see if you have a business credit history, that's a great place to start. There's also NAV Prime, and for a small fee, you can see detailed business credit reports and personal credit reports in one dashboard, and you can monitor your progress. You can also get up to 2 trade lines to help you build your credit history. This is really a good way for you to get started, monitor your credit, and then monitor your progress. So check your business credit, get started today. Again, you can start for free with NAV. Just check the link in the description. Get NAV's free step-by-step checklist to build your business credit. See the link in the description. If you have questions about building business credit, drop them in the comments. Like, share, and subscribe for more business building tips.